Okay. Hey everybody, it's BJ.
And Patrick.
And we're back talking all things real estate. And Patrick, we are coming to the end of 2024.
Yeah.
Obviously.
It's been an interesting year.
Yeah, it really has. And so what we'd like to do today is we are going to talk about the year in review.
Yes.
Okay.
Sometimes it's painful and sometimes it's like reminiscing.
Reminiscing. Yeah. So we are going to talk about the 10, call them notable, call them the big trends in real estate in 2024.
Let's go.
All
do
right,
it.
so here we go. All right. Number 10, high housing values, interest rates, and taxes contribute to post-pandemic exodus from Canada's most expensive provinces.
Like the post-COVID hangover.
Right? Yeah.
Right?
Yeah.
Like, oh, we finally got to enjoy some reduction in interest rates and we're avoiding the mortgage cliff for the most part.
Yeah. Well, so here's the thing. We've talked about these numbers before, but close to 60,000 have, there's been an uptake of an increase of 60,000 going to provinces like Alberta.
Oh, people leaving.
Leaving and going, going to Alberta and Atlantic Canada. So there's been a 60,000 population uptick.
To those provinces.
Right.
Yeah.
So,
well, we keep encouraging it, right? If you're living beyond your means in Vancouver or Toronto or even Montreal, go find somewhere else where, the affordability and opportunity exists for you and consider that.
Yep. Okay, that's number 10. Number 9, nearly half of Canadians considering alternative paths to home ownership.
Ooh, yeah. Okay.
So,
interesting.
They're talking about maybe they get a couple of people together to purchase a property, or a couple of, maybe 3 people together or something like that to come up with a down payment and then purchase the property and everybody owns it together.
That's one way of doing it.
Yeah.
Yeah, I haven't seen that personally. I've come across people who like that conversation is there.
Yeah.
But I don't think it's a mainstream thing yet.
Yeah,
but,
I think maybe in the case of, like, for example, parents. So
that's exactly where I was going.
Yeah, right. So I'll use an example where a client of mine sold their condo, and the buyers, there were 4 of them on the contract
all together,
and then 2 of them were removed, the parents, because the parents were on just in case to get everything done with the financing and whatever needed to be done. And then eventually it all worked out so the parents could come off.
Oh, you know what? I didn't even think about it like this way. It's not even because like, I wasn't even thinking about it. It was just, let's put a third person on the offer. And it was the daughter. Right. And with 3 incomes on there. Yeah. Sure. We bumped up into quite a nice house, and the daughter they're still going to rent the suite out, live in the house, but she has part ownership in the house now.
Sure, yeah.
Yeah.
Okay, number 8. So part of this is going to be more relevant to Ontario. Whenever you talk about cottages, that's usually relevant to Ontario. But there's
cottage country,
Yeah, but you could apply this to recreational properties, period. And we know we have a lot up here. There's going to be some in the mainland, lower mainland, Kelowna, in Alberta. But okay. Cottage owners choosing to retain and maintain their recreational properties despite higher interest rates and affordability concerns. So,
watching the island, I haven't seen a mass exodus of like cottage properties becoming for sale. Yeah. I know I've heard the rumors for like Northern Ontario that a whole bunch of cottages came up for sale, and some of it's for other reasons too. Yeah. But anyhow,
But that's it.
I didn't.
You basically hit it. We haven't seen that. So that was one thing as well. Okay, number 7, multifamily construction continues unabated across Canada with, with purpose-built rentals the primary focus in every major urban market.
Right, because we have federal and provincial money, our taxpayer money is pushing rentals.
Yes.
So there's a huge incentive that's been pushed now for at least a while, and so we're seeing it.
Yeah.
Yeah.
Okay, number 6. Experienced buyers and investors are taking advantage of softer detached housing prices and driving sales in Toronto and Vancouver.
That's right. Where Vancouver, Toronto more. The condos are taking a bit of a hit.
Yeah,
slower, really low sales volume. Yep, that's what we saw.
But the single family,
Yep,
is still, and this is what's happening. It's the evil speculators that are
obviously
right.
I'm being facetious, right?
As am I, yeah. Because
so, right, but this is the smart ones. I'm going to jump on this one, right? The smart people are realizing that the single family house. There's still going to be custom homes being built, but the spec house, speculation house, the ones that builders speculate to make money when they build these houses and then sell it to the end user, is going to become a giveaway to the dinosaur. It's a dying breed. It's going to become more and more difficult. It is the highest desired property out there, and there is no incentive to build single family homes. We're having the missing middle housing encouragement, especially down major corridors in cities.
Yeah.
And to build all these multifamily properties, these condos or rental units or whatever. So single family home detached is the best way to go still.
Yeah.
For long-term personal nest egg. I'm not saying investment outside of that. That's a whole different conversation. Yeah.
So number 5 is starting to see the uptick of housing construction here in the fall.
Oh, I didn't realize that.
So basically because of the prospect of lower interest rates and things like that, where again now you have the evil speculators are going to try and build now with the lower rates because they're looking ahead to selling in the new year.
That's right. Yeah.
Right. So this is what's happening right now. So there's an expectation that there's going to be a 1 to 6% increase in housing prices in the upcoming year. I think it's going to be more than that in the Greater Victoria area.
I think that's generalized all over Canada,
yes,
right?
That's right. Yeah.
You're right. And then there's other reports saying it's more like 3 to 6% expectations for Victoria, but we'll see.
Yeah. Okay. Number 4, scarcity in Toronto and Vancouver expected to impact future values as single detached homes become housing's new unicorn.
That's right. It's like looking for dinosaur bones.
Right. So because of, again, the government money and the government push to do this infill, what is it? Missing middle initiative.
Housing, whatever.
Middle something. Yeah. So we saw that in this last year where their focus is on that missing middle initiative and less on single family homes.
Yeah, Victoria started that and then everybody jumped on board, and now Justin Trudeau really likes what Evie's doing in that case, which he got from here. But
yeah.
And that was a failed start at the beginning anyways.
Sure.
Because Victoria doesn't listen to the builders. I mean, the stakeholders, like what's going to work and what's not going to work. But they have adjusted that, and there are some missing middle projects finally being built. So
yeah. Okay, number 3, double digit. We can't go in that direction because we've been down that road many times. So
I've got so much more to say about that.
Yeah, right. So okay, number 3, double digit increases in condo inventory reported in most major cities as sellers return to the market ahead of more interest rate cuts. So we're starting to see more condos coming on the market. So they're specifically, statistically, what we're talking about here is Greater Vancouver, Fraser Valley, Calgary, Edmonton, Greater Toronto, Ottawa, Halifax in the fourth quarter.
Yeah, well, we've been pushing for so much. The story has been going on forever. Mm-hmm. It feels like for at least 135 years in Vancouver, and I'm not being like exaggerating about that. Like people have been complaining about housing, so we've been pushing for like more supply.
Yeah.
And from decade to decade, things just keep getting more and more expensive.
Yeah.
Which really means your dollar value is being lost, eroded away and it's represented that assets are increasing in value.
Yeah.
Yeah, they're pushing for more condos.
Yes.
So
yeah,
makes sense.
And the other part is, we saw it in Toronto where all these condos got finished.
Yeah.
And now they're all hitting the market, right?
Yeah, and they're going to continue to, right?
Yeah,
There's
same with
still
Vancouver.
projects.
Yeah. So, okay, number 2, I think this is a good one, is mortgage stress test gets an update. We finally saw an update, okay? And to bring some relief to buyers, and I love this, finally, to bring some relief to buyers, right?
Right, but it's sort of like, it's very specific. Did they, I can't remember the exact purchasing stress test, but for refinancing, you don't have to stress test anymore.
That's right. Let me read this quote.
Or renewing with somebody else. Yeah, it was, you don't have to stress test to renew with another bank.
Yes, that's right. So this is a quote from Christopher Alexander at the Globe and Mail. There is no doubt that the mortgage stress test was good policy at the time when it was created, credited with preventing a swath of foreclosures when rates eventually started climbing in 2022 and 2023. But in today's higher interest rate environment, it has become a counterintuitive policy serving only as an additional barrier for first-time home buyers. So,
yeah, for the longest time, I don't like the policy because it prevents exactly what it said.
Yeah.
But I've always liked that, it keeps people purchasing within their means.
Yeah.
A little bit better. How about that?
Yeah, but I think, like we're saying, it's the changes that they rolled out in November were like what we just talked about with the renewals and so forth. So that's a big one. Okay, number 1, what we saw in 2024, the jumbo interest rate cuts have prompted a rebound in the market.
Yeah, it's pushing people off the fence. I think it's going to be talking about 2025. I think we're going to have a spring that we didn't have last year.
Yeah,
last year, 2024.
And we're starting to see, along with the change to the stress test, we're starting to see housing prices start to inch up again.
Yeah,
I certainly know we're seeing it here. I'm not sure about all the other markets because we're not in every market, but you would expect the same to happen across the country.
Yeah, and a combination of other policy changes for financing has come about, and I think all of those have added, especially the interest rate, because you can see the payment changes, and now for first-time home buyers, new construction amortization is spread out over 30 years instead of 25 years. But you could always say like, oh, Patrick, I'm going to spend hundreds of thousands of dollars of interest, more for the house eventually, right? With interest rate or interest payments.
Yeah.
The thing is, the longer you spread out your money for, the more opportunity to have a lower payment. I'm not saying max out what you can purchase, but to be able to pay it down quicker so you're not paying that interest rate. Yeah. There's strategies for that. We can get into that into another video, or take the time and Google those things. Those are out there, and compare that with mortgages that are being offered or the one you have. So there we are.
But you know what? Hey, put it in the comments. What do you see as the biggest takeaways of 2024 when it comes to real estate and maybe the economy, maybe the interest rates, maybe it's policy, whatever it is. But put it in the comments because we love to see that stuff too and hear what you've got to say about it. And otherwise, have a great new year. And going into 2025, we're expecting good things, expecting a good year.
I've been doing this for so long. It's just like, it's just another year. If you're ready to buy, ignore everything. If you're ready, if you can afford the interest rate payments, it's within your means and it's the right move for you at your life. That's it. It's going to be busier. We just had a medium slow year. It is what it is.
Yeah.
If it's important to you, you'll do it.
Yeah. Thanks for joining us.
Take care.
See ya.